Good afternoon, everyone, and I hope you had a wonderful break. First of all, thank you for the organizers with Marine Money for this fine opportunity, and also thank you for all the speakers who came before me, who gave such an interesting presentation about some of the challenges involved with decarbonization and some of the challenges, especially from the perspective of Chinese shipyards, shipbuilding, and the capacity developments that we have there. So I'll try building onto that and quite honestly expanding to actually understand what role China can play as a really provider of these types of services, and also in the context of global trade, what are some of the opportunities and challenges involved with the decarbonization opportunities we have at the moment. So 1 second, just trying to figure. Thank you. So as was mentioned in the introduction, my name is Domagoj Baresic. I'm a research fellow and research associate at University College London and also a consultant working on maritime decarbonization. So our team has done a lot of work on different types of decarbonization strategies for shipping, been authors of several techno-economics assessments, and also passionately involved in some of the IMO processes relating to maritime decarbonization, especially over the past few years leading up to the revision of the 2023 IMO greenhouse gas strategy. So this is our background, understanding the techno-economic and the regulatory or socio-economic, and how do the two combine, how do the two interact, and what is the role of shipping in this process and the different stakeholders of shipping. So as mentioned previously by some of the other panelists and speakers, 2023 really saw this new impetus for maritime decarbonization coming in the form of the 2023 greenhouse gas strategy adopted at MEPC 8 at the Marine Environment Protection Committee meeting at the IMO in earlier this year in June, July 2023. So the perspective from that was really that we have these new ambitious targets, and there's several of them, but the specific ones for us are really the emphasis on the well-to-wake GHG emissions rather than the tank-to-wakes. So really this understanding that upstream will count to an extent and will count in the regulations that come through in the future, which is quite important from the perspective of what fuels can play what kind of role. And then secondly, this aspect of net zero by 2050, really taking us up significantly from that previous level of ambition from 50% decarbonization by 2050. And then in addition to that, these other aspects, such as the adoption of 5 to 10% of lower zero-emission fuels by 2030, and energy efficiency improvements and different types of regulations as well. So this really, from our perspective, from our analysis, shows a quantum leap in ambition at the IMO. I mean, this is an analysis by the Climate Action Tracker, and their perspective is based on different types of metrics on how sufficient shipping progress is. So I'm not going to go into that, but what I would like you to focus on is the diagram. And the blue really shows you where we are with current policies. So this slight business as usual with some energy efficiency gains, the trajectory of shipping emissions into the future. But if you look at the green, going down, that's where we have to be according to the 2023 IMO greenhouse gas strategy. So you can see a significant change and a significant decrease in emissions that's necessary over this period, also showing what the ambition that the IMO set out is, the level of that ambition with these ambitious indicative checkpoints, which puts shipping on an alignment with something called a 1.5 degree emission trajectory, or almost to that alignment, which means that shipping can contribute its fair share to global decarbonization. And this 1.5 point will become important in the future as we go through the slides. So I'd like you to think about it. Think about that ambitious alignment to these 1.5 degree goals. So it's not just about where we come to in 2050, it's also about the path there and this ambitious pathway and decarbonization trajectory up to 2050. So how do we come down to that 1.5 degrees? So to your right, you see these science-based target initiatives that some of my colleagues have also been working on, which say how much shipping has to decrease its GHG intensity in the future to contribute its share on this 1.5 degree trajectory. And to your left, you see the IMO strategy and the striving limits of the strategy. And what you can see is, even though they're not fully aligned, they're almost there. There's this really ambitious goal that the IMO has set out. Ambitious goal in terms of GHG intensity decarbonization or lowering of GHG intensity, but also in terms of the net zero and the final goal, and the overall shipping decrease in emissions. So by 2030, to be on this pathway, most of this contribution comes from this gain or from this decrease in energy efficiency. And depending on the mixture of alternative fuels, compared to 2008, we see around 42 to 48% improvement in energy efficiency in this baseline IMO trajectory, but going even beyond 2050 and these more ambitious or striving goals of the IMO greenhouse gas strategy. However, that will also depend on the fuel of the future, but it shows the amount of technical expertise and shipbuilding, as was mentioned from a shipyard perspective, what the shipyards have to work with in respect to not just looking at the alternative fuels, but also looking at ways to improve this energy efficiency and ways that those EEXI, CII indicators can be further improved. So this is the challenge from the shipyard perspective. How can they work on these improvements that go beyond operational efficiency? Because by 2030, this will be a significant part of the overall goal and a significant part of the overall target. So as mentioned, what we will see is, in addition to the current measures from the IMO, that 2023 strategy means that future measures will come into play. And those measures will come into play over this decade, and they will affect the way that shipyards can build ships, they will affect the way that international trade is created, and they will also affect mechanisms by which these processes take place. So I think just briefly appreciating that timeline is quite important. So we were at MEPC 80, so the meeting that adopted the 2023 strategy this summer. By next year, we have 2 more MEPCs where we have the discussions, the negotiations taking place. And I cannot emphasize the role that different countries play in this process and the incredible contribution of China as well to this process of negotiation and trying to reach a common understanding between differing views that came in that process and trying to reach that understanding. But having said that, by 25 or MEPC 83, we have to lock in some of these measures, develop those measures, and have an analysis of them. So we're really looking by the next part of the decade to have new measures in place that include something called an economic element or some kind of probably market-based measure applied to shipping globally. And this measure, with the revision of the strategy, will then come into force in the years to come, probably by the late 2020s or by close to 2030. So we're looking at a change over the next 7 years. That means the shipping has to be on this ambitious decarbonization trajectory, has to improve energy efficiency, but also be ready for more ambitious targets that are coming in line with that trajectory that we saw. And that trajectory will come into force by 27, 28, and moving forward. So what does this mean in terms of fuels that we mentioned previously? What does this mean in terms of how shipping can decarbonize in the future? And this is one of the types of analysis that we've done based on some of these techno-economic aspects. And you can really see that in terms of the conventional fuels of shipping, we start in 25, and by 2030, we see a significant drop in them. We do see an increase in alternatives, and here, based on our techno-economic assessment, just on the price comparison, that fuel in red that takes over mostly after the 2030s is ammonia. Now, you can change that assessment based on some assumptions. It could be another fuel, it could be synthetic or e-methanol, for example, but it really depends on the techno-economics. Our techno-economics show that ammonia has the edge with certain assessments that we've made. You see this big green aspect of LNG as a transitional fuel. Now, I would like to focus on that for a bit because it becomes important towards the end of the presentation, and that is the fact that the assessment here is based on what we've done on the tank-to-wake emissions for LNG. So this is the adoption rate you would see for LNG with the revised strategy, but with a focus on tank-to-wake emissions. Having said that, the IMO has also emphasized that it will in some way include those upstream emissions, so well to wake. So if it's including all of those emissions, and if you consider methane slip as well, or methane emissions that come from the unburned methane in a LNG-fueled engine, you do see that green proportion decreasing significantly, and you do see risks associated with that as well. So there's an option for LNG, but also significant risks from the upstream emissions perspective and the methane leakage perspective as well, on top of some of the other considerations that have to be given to what the fuel of the future is. But what you can see is by the 2030s, you really come into that play where fuels such as ammonia, such as hydrogen, and other electrofuels do become more and more dominant. And for the shipyards and for the R&D research departments in those, now is the time to actually understand what part of that process they can play in and how they can adapt to this changing future, especially as the safety regulations for fuels such as ammonia, for the IGF code that the IMO are being developed at the moment, and also developments with similar types of considerations for methanol and potentially for hydrogen as well. And this leads us to another important point that a few other presenters have made previously about trade and about inevitably shipping is responsible for most of global trade, and some of the challenges associated with this transition are a potential increase in trade costs or transportation costs which lead to trade costs potentially. So what we've done is try to analyze some of these aspects and to understand, well, what does this transition, this adoption, this bold adoption of these new fuels have in terms of an increase in transportation costs? And what we see is that if you see the blue bar, so the main part of these energy-related transport costs comes from the perspective of fuel or the fuel costs. With the new fuels, you can see that that carbon cost is increasing. So if you're running a vessel on a conventional ship, by the 2030s or late 2020s, as those new measures come into force, you do have an increase in that cost because if you're running a vessel on a conventional fuel, you need to pay that economic element, that carbon cost. So that increases your cost in this intermediary period by the late 2020s, early 2030s. However, there's a few considerations to be made here. The vessels that are running on those alternative fuels, they do not pay the carbon. Here we're talking about fuels such as hydrogen, ammonia, perhaps certain forms of methanol. They do not pay the carbon. So if the cost of that fuel becomes competitive, that aspect stops playing a role at a certain point in the future. The other consideration to be made is if you look at 2022, we saw a significant increase in transportation costs related to the market volatility, especially caused by what was happening in Europe at the time and some results of the pandemic. So that increase is actually more or less within the margin of what would be expected from the carbon cost increase. And so just to put that in perspective, so this idea that the transport costs will go up is correct, but when you put it in perspective of previous volatility or previous changes in the market, you realize that it's within what the industry has already experienced in the past, and that this is a transitional approach, that eventually these costs would go down with the development of the alternative fuel infrastructure and production capacities. However, it is something to consider. It is something to consider from the wider perspective, especially for countries that do depend on trade. And then we come to this idea of supply. So a lot of the focus is on, will we have the demand? Will we develop those fuels? But the question is, do we have the supply necessary beyond LNG, but looking into these scalable zero-emission fuels, these fuels such as perhaps hydrogen, synthetic methanol produced from green hydrogen, or green ammonia produced from the electrolysis and the Haber-Bosch process. What you realize is that the future supply of these fuels, and this is from an analysis we've done earlier this year, published actually 2 weeks ago and announced 2 weeks ago in Athens, looks into the future availability of, in blue, green ammonia, and in this orange-yellow color, synthetic methanol. So what you can see is there's a huge margin in the future availability of these fuels. But there is an upscale, there is a potential to have enough of these fuels by 2030. But that depends on the interaction between supply and demand. Because the level of having more supply than necessary is from those projects that have been announced, that have been planned, but are not under development yet. And that development is pending having the demand input for them. So there's this interaction between supply and demand that will affect how the future develops. But in theory, there is quite a lot of supply potential there, as long as the market signal is there to actually tap into those projects that are being developed, that are under construction. And then moving into this last bit of the presentation, really understanding what does all of this mean in terms of shipyards and in terms of financing of the decarbonization trajectory. So one of the important aspects to consider is that in the immediate term, in the 2030s, in the 2020s, and into the 2030s, a lot of this transition will depend on not just building those new vessels by the shipyards, but the shipyards having capacity to retrofit existing vessels. And this is what you see in the green bar, this amount of retrofitted vessels necessary to actually contribute to this transition. So as you can see, from that capacity, you see significant amounts of new vessels being built, and also some risks with premature scrappage of vessels you cannot retrofit. So, and these vessels can be considered as these additional costs for the industry, or these stranded assets, so to say. So you can see that that starts playing a significant role already in the late 2020s, moving on to the 2030s. So for large Chinese shipyards, this means about understanding what those retrofit needs will be. What are we retrofitting for what? Are we retrofitting LNG vessels to run on ammonia, or are we retrofitting conventionally fueled vessels to run on ammonia or LNG or perhaps methanol? So that is the question here. And our analysis shows it's mostly about going into those electro fuels, but the risk becomes if you're retrofitting, if you're building a new vessel now to run on LNG and then retrofitting it in the future to run on ammonia, what are some of the pros and cons there? So a few considerations to take into account. So for that analysis, we've actually looked at this transitional fuel of LNG as an exemplar and tried to understand what we have to the left in the order book of how many vessels are being in the order book, for example, for LNG, and how many vessels do we see in the future. And then understanding to your right, what could be in this optimistic, in this ambitious LNG scenario, the uptake of LNG in line with that regulatory development at the IMO. So what you can see is the order book, to an extent, is, I wouldn't say bullish, but it is on the upward side of actually where we expect. So also significant order book for LNG-fueled vessels beyond the LNG carrier perspective. So beyond the carriers, you also see a lot of container ships fueled with LNG, etc. So still a small proportion of the overall fleet, but growing. So in this scenario, what we see is the projected fleet value of new investments by fuel type growing towards LNG becoming a significant proportion of them, almost 50% by 2030. So this is the scenario. This is the understanding. If we want to be aligned with 1.5 degrees from the IMO initial the revised strategy, if LNG is the way to get us there, well, this is an optimistic scenario of investing in LNG from the financier's perspective. But that leads to the question, what are some of these are the upsides. You have a fuel available, you can invest in it, and you can align yourself with the current trajectory. But we have the current trajectory, and then we have the future regulations coming into 2030. And that's where the risk lies. The risk lies in these future regulations and how they will affect the shipping industry. So as mentioned, from the perspective of future alignment with that, and for basically, if you see the bottom line, you're trying to understand carbon intensity and portfolio carbon intensity, so that your investments into new build ships are aligned with those decarbonization trajectories. And what you see is, generally, in order for you to be aligned, you could be aligned, but you have to have these short tenors below 7 years, and you have to invest in these new build ZEV, or zero-emission vessel ships, as soon as they become available, and they should become around, well, up to 100% by 2030 to be aligned with these types of developments. Now, no one is saying at the moment that there will be a direct regulation of you saying you have to be aligned as an investor, But if you want to invest in ships that will be operating in the industry, and if the regulations are as they say they will be now, it means for you to have a business case, you should be aligned with this type of development. So this is the challenge. You can be aligned, but you have to have these short tenors. And otherwise, you end up investing in ships that will not be able to operate in the future. So how do you get around that? Well, one way is instead of just investing in new build ships, you also invest in those retrofits that we saw earlier. You invest in those retrofits, and you invest in them in a way that is potentially profitable and also aligned with this future trajectory that we saw at the beginning of the presentation, this downward ambitious trend. And here, again, you're seeing that the existing debt can be conventional ships of just under 10 years if you're investing in retrofitted ships. You see retrofitted ships becoming a significant part of your portfolio in the late 2020s, early 2030s, and then completely replaced by these zero-emission ships. So in this process, that debate becomes quite important. What is the role of these transitional fuels, for example? Yes, in 2035, you're investing in that hydrogen, ammonia, methanol vessel. In 2023, you're investing in that conventional vessel. But if you're investing in an LNG vessel, at one point, what is the lifespan of that ship, and when do you have to retrofit it? And is there a risk that by investing in that ship, you're actually creating a potential increase in cost or a stranded asset? So that's part of the analysis we tried understanding. And the conclusion from that is basically here, that if you look at your loss of premium of a low sulfur heavy fuel oil vessel, and then compare that to zero-emission vessels, new builds, when you're looking at an LNG comparison, you do see that there is a certain amount of stranded assets that is quite significant in the case that those regulations come into play as are. So that is something to consider. If you're investing in a vessel that's alternatively fueled today, but is not zero-emission capable, that is in line with those regulations that will come into place in the late 2020s, you do have a potential risk of investing in something that's aligned with the portfolio, that's aligned with the regulations now, but that in the next 10 years will not be aligned. So that's your risk. Your risk is that future potential for non-alignment. And this brings us back to this point about China. First of all, from your perspective of shipyards, what's important for China is to understand that retrofit capability. From the perspective of trade, it's understanding where the bunkering capacity and the production upscaling for those alternative fuels comes from, and whether the supply is there, locally available, to actually have it competitive in terms of transportation costs. And in the terms of R&D, whether you're actually aligned with those types of trajectories that the IMO has come up with. So that's more or less it from the slides, and thank you very much.